Hello students, now we are taking the next problem, that is 8th problem on the admission of new partner. Here, 4th one here in the test book. Ravi and Shankar are partners sharing profits and losses in the ratio of 5:3 and their balance sheet as on 31st/3/2018 was as follows. So balance sheet as on the 31st/3/2018 is as below: liabilities rupees, assets rupees. They given the format. Creditors on the liability side, creditors 50,000, bills payable 40,000, reserve fund 20,000, capitals Ravi invested 50,000 and Shankar invested 35,000. Next, asset side, cash 10,000. Here cash word is here. In the old balance sheet, cash is given here, not cash at bank, only cash is given. So you have to prepare the cash account in the necessary ledger accounts here. So cash account. And while you are taking the new partner capital, your entry should be cash account. So cash is here 10,000, stock 32,000, bills receivable 10,000, debtors 40,000, furniture 15,000, buildings 40,000, plant and machinery 40,000, and profit and loss account on the asset side, it is loss of the old partners becomes 8,000 here. This should be partner related entry, profit and loss account, that should be entering in the partner's capital account debit side here because it is a loss. And one more, liability side, reserve fund is there. This is also partner related item, so it is on the credit side of the partner's capital account because it is a liability. Liabilities are shows credit balance and assets are shows debit balance. So next, balance sheet total is 1,95,000 and here also 1,95,000. Next, Prasad is admitted on the 1/4/2018 on the following terms. He brings in rupees 15,000 as goodwill. ಯಾವತ್ತು ನಿಮಗೆ ಕ್ಯಾಪಿಟಲ್ ಫಸ್ಟ್ ಕೊಡ್ತಿದ್ರು, ಇಲ್ಲಿ ಈ ಕ್ಯಾಪಿಟಲ್ ಫಸ್ಟ್ ಕೊಡ್ತಿದ್ರು, ಆಮೇಲೆ ಗುಡ್ವಿಲ್ ಕೊಡ್ತಿದ್ರು. ಇಲ್ಲಿ ಏನು ಕನ್ಫ್ಯೂಸ್ ಮಾಡಿದಾರೆ ನಿಮ್ಗೆ, ಗುಡ್ವಿಲ್ ಫಸ್ಟ್ ಕೊಟ್ಟು ಆಮೇಲೆ ನಿಮ್ಗೆ ಕ್ಯಾಪಿಟಲ್ ಎಂಟ್ರಿ ಮಾಡಿದಾರೆ, ಕ್ಯಾಪಿಟಲ್ ಅಮೌಂಟ್ ಕೊಟ್ಟಿದ್ದಾರೆ. ಸೊ ಯು ಶುಡ್ ಬಿ ಕೇರ್ಫುಲಿ ರೀಡ್ ವಾಟ್ ಈಸ್ ದ ಅಡ್ಜಸ್ಟ್ಮೆಂಟ್ ಹಿಯರ್. ಸೊ ಹಿಯರ್ he brings in rupees 15,000 as goodwill and 30,000 as capital. Rupees 30,000 as capital and 15,000 as a goodwill. And for 1/6 share which he acquires in the ratio of 2:1 from the Ravi and Shankar. So here this is the sacrifice ratio. Because why you treat it as a sacrifice ratio? In the calculation of sacrifice ratio, you are taking the second case now. In that second case, when old ratio, here old ratio is given, here old ratio and new partner share also given here. When old ratio and new partner share and share acquired by the new partner from the old partner is given in that problem, no, in that case what the acquired share is given, no, that becomes itself sacrifice ratio. That ratio becomes here sacrifice ratio. So it's taken as a sacrifice ratio 2:1. And in this ratio you should be distribute the goodwill, whatever adjustment entries should be there, no, those should be distributed in the 2:1 entry. And reserve fund also, only old profit is distributed in the old ratio. And in the distribution of all entry among the old partners, that should be taken as a sacrifice ratio 2:1. You understood now? Yes. Half of the goodwill amount is withdrawn by the old partner. Goodwill case is here, withdrawn by the old partner is there. Next one, building is revalued at rupees 55,000. Maintain PBD at 10% on debtors and bills receivable. Both on the both assets you should be PBD at 10% on debtors and bills receivable. Depreciate furniture and plant and machinery at 10% and outstanding legal expenses rupees 500. So this is the unrecorded liability and outstanding legal expenses. Unrecorded liability is on the debit side of the revaluation account and one more entry is on liability side of the new balance sheet is here. So next, prepare revaluation account, partners capital account and balance sheet after the admission, or you take it as a necessary ledger accounts. You should prepare here necessary ledger accounts. That becomes here revaluation account, partners capital accounts, bank account, goodwill account and new balance sheet after the admission of new partner. These accounts should be prepared here by taking these above information.